Okay. So today this week actually we are going to work on chapter 11. Chapter 11 is about financial reporting concepts. So this chapter is quite conceptual, right? So we're going to learn quite a bit of concepts that are at a higher level, right? So these concepts are relevant in the mind of those accounting standard setters, right? So those people will consider, right, the financial accounting framework, right, in order to present this financial information to the users, right? So what is the framework should be like? So when we are considering useful information, right? We want to present information. We don't present any information to the investors. We want to present information that are useful to the users, right? So they can read the information, make the decision, right? So then the question would be, right, who is going to use this information? What characteristics would be considered as usefulness, right, in terms of the information, right? What are the elements, components of the information on the financial statement? So the idea is, so we need to rely on a framework when we are considering all these aspect. Okay, so that's what about this chapter? It's quite a conceptual. There's no numbers we need to work on. Okay, but we want to understand, appreciate those concepts, okay, at a higher level, and those concepts will affect how people will make decisions, how we're gonna report the information. So the first learning objectives, okay, is to explain the importance of having a conceptual framework of accounting and list the key component of this framework. Okay, the frameworks. So we need to have a foundation for accounting. We need to ensure the accounting standards and the practices are clear and consistent. Okay, if they are not clear, people are hard to use. People cannot use them. If they are not consistent, right, and then that will lost the value of comparability, right? Sometimes if one year it's, you use this way, the other year use another way. If one company use this way, another company use a different way. So they are not consistent. So it's hard for people to compare. We need to have the foundation of accounting to provide guidance in responding to new issues and developing new standards, right? So the world is changing very fast, right? There are new things coming out, new ideas, new concepts arising. So for example, cryptocurrency, right? So when I was a student, uh, 15 years ago, when I learned about accounting, there's no such thing, right, about cryptocurrency. So cryptocurrency is a new thing, right? And then this is a new issue, right? What's the implications on the accounting side? How accountant should treat this cryptocurrency, right? How to do the valuation, all those type of things. So when you have new things, you need have a foundation of accounting to give you the guidance. Also, the foundation of accounting will assist in the application of the standards. Okay, so sometimes you have the standards there, but how to apply them to the real scenarios, that is quite challenging, right? So it's important to have a common ground in terms of how to apply this standard. Increase the user's understanding and confidence in financial statement, right? if we have done all these things, have a common ground, the foundation for accounting, then the users of these accounting informations will be more confident, right? Your information are useful. It's important to know that the accounting standard, they are built on principles, not on rules, right? Not on rules. So principles is different from rules. Principles would say, I don't have any. If you are traveling, right? The principle would be you need to be cautious when you are driving. Don't drive too fast, okay? Because it's dangerous, okay? But if you don't drive too slow, right? Because if you drive too slow, you kind of reduce the benefit of having a road. So, so the general principle would be, well, you have to exercise your judgment depending on the road condition, the weather condition, and you have to make a decision of at what speed you are driving, right? So those are the principles, the safety principles, right? When you are driving, you need to be careful about your safety and other, right, other car drivers' safety. The rules would be, if you say about rules, the rules would be okay. The speed limit is 100 kilometers per hour, so that's the maximum you can drive, right? So principles is different from rules, right? The accounting standards are built on principles, okay? Are built on principles. Therefore, there are a lot of rooms for people to make a decision, make a judgment, because there are no clear rules tell them, right? Conceptual framework, key component, okay? So the conceptual framework, to use it, you have to exercise professional judgment and the framework to determine the appropriate accounting treatment, okay? When you are dealing with a new issue, new situation, you have to exercise your judgment, right? And rely on the framework and to come up with a solution. So when we say we rely on the framework, what are the key components of the framework? So there are the 5 key components. The first one is objective of financial reporting and the user needs. So what is the objective of financial reporting? Why you are providing this financial information? Why does the user need it? Right? Those are the first level. Second level is the elements of financial statement. So what information you are presenting, the element of financial statement. The third level would be qualitative characteristics, right? So what is the characteristics of the information? Okay. So is it relevant? Is this information relevant to the user? Right? Today is 2024, right? And you tell me something like 10 years happened 10 years ago, right? That information is not relevant to me today, right? Because it is dated long back, 20 years ago, 10 years ago. So that information is not relevant, it's less relevant, right? Because the reason why I need information is that I need the information now to make a decision, right? I need relevant information. I need information that will impact my decision. Right? So what will be relevant information to you guys? I think probably yesterday or 2 days ago, the government immigration, the Ministry of the Immigration, they make an announcement. They are going to kind of narrow it down. They're going to reduce the number of the student visa, right? I'm not sure if you guys know about it, right? So those will be the important information that is relevant to you because you guys are students, right? and how that new immigration policy is gonna affect you, right? So those are the relevant information, right? If I tell you that the Chinese the let's say the Britain prime minister fell, right? You probably care less about that, right? Because it's not relevant to you, okay? And then another one would be reliability, right? So if I tell you that, you know, each the UCW student will receive $2,000, okay, tomorrow you are going to receive $2,000 from university, right? So that's the information, but is that reliable? Who said that, right? It's a rumor or it's official, right? So you probably want to go to the university website to check, see if there's an announcement made, right? So reliability, when you give information, is that information reliable? Okay. So that information of university giving you $2,000, that is relevant because it's relevant to you, right? Because you are a student at the university, but it may not be reliable, right? Because you probably don't believe that, and I don't believe that either. So that's not that we talk about qualitative characteristics, recognition and the measurement, right? So you first have to recognize this is an element should be presented on the financial statement, right? And then you want to think about what number, what amount it should be on the financial statement. That's called a measurement, right? So recognition measurement, let me give you one example. Think about this, right? You go to a clinic, right? You go to a clinic to see a doctor, right? So you are seated in the waiting area. And then the nurse walked out of and then the nurse first job is to recognize, right, the patients, on the list, right? So first, the nurse will walk out and they will first recognize which person who is the one I'm going to bring to the clinic room, right? They will call name, and then you'll be like, okay, yeah, it's me, right? So first, it's about to recognize, right? So once they recognize you, right, they bring you to the room, and now they will do the measurement, right? They will measure your temperature, they will measure your weight, your height, right? Blood pressure, right? So just think about that. The same idea when you're presenting financial information. You first have to recognize, right, which information should be presented on the financial statement, right? And the next step is to what's the measurement, right? What's the measurement? How much, I should report, right? The last is the from the foundational concepts, assumptions, and the constraints, right? The one assumption would be the business will keep going, right? So that's the assumption. You present the financial information to the users with the assumption that the business will keep going. The business is not going to bankrupt, right? If you know the business is going to get bankrupt, then the way how you present this information will be different. Okay, and the constraints, right? One constraint is the cost benefit constraint, right? So you probably are able to come up with the high quality financial statement, right? High quality financial information, but you need to be aware of the cost of getting those information, right? So for example, you can hire like 10 CPA, right? To polish your financial information to make it high quality, right? Financial information to make it useful. But it costs you a lot of money to hire 10 CPAs, right? So eventually it's a trade-off, right? Trade-off. So the benefit, right, of increasing the quality of the financial information has to be balanced off with the cost, right? So think about there are different accounting standards. Why? So, for example, international financial reporting standard, right? So to prepare financial information under that standard, it's going to cost CPA more time, more hours. Therefore, it's more expensive to prepare financial statement under IFRS. But there are benefits, right? Because there are millions of users of the information, because the investors can be anywhere from the worldwide, right? They are going to read the information you prepare and to make a decision whether they are going to invest their money to the company, right? So in that case, you see, better information, you have additional benefit. And so the additional cost of additional hours spent by the CPA, right? It has a benefit because there are large user base. Right? But if you think about ASPE, accounting standard for private enterprises. So now this is the private enterprises, right? Oftentimes they are not listed in the public accounting, not listed in the stock market, and they are owned by a family, right? So they have not many people are interested in their financial information. Okay, so probably the bank wants to know their financial information because they are borrowing money from the bank, right? So in that case, it's only bank wants to know the information, or maybe the shareholders of the family members wants to know the financial information. Would you still hire, the CPA to spend lots of hours to improve the quality of the financial information? The answer would be no, because there's the additional benefit is very marginal, right? Because you only have a couple of users, right? And the shareholders know the business really well. They probably don't have to, read the financial statement. So the point is, there is a constraint you have to consider: cost and benefit. Okay. So to look at this picture, this is called the conceptual framework pyramid. Okay, the pyramid. So that's the 5 level. Okay, building this framework up. The first, what's your assumption? Oh, the business is still going, right? The constraint is the cost benefit, and then you have to recognize these items should be presented on the financial statement. If yes, how to measure this information, right? What is the amount of the dollar amount? Are this information you recognized, measured, are they relevant? Are they reliable, right? Are they comparable? Are they timely, right? So those would be the qualitative characteristics of the information you are presenting. And then this is the element of the financial. So eventually you have this information, right? Assets, liability, equity, revenues, and expenses. So these are the elements of the financial statement. And at the very top, that's the objective of the financial reporting, right? So all these things you are doing, you are building with an objective, right? Is to make it useful to the users, right? To make it users. So this is my learning objective number 1. Does anyone have any question?